Portfolio Builder members, the stock market is on fire, and your skeptical editor has some defensive trade alerts for our big positions and some bullish positions for our smaller positions. And it would appear there's a rotation from tech into banking in the next few weeks, and we'll look at that. Portfolio jumped up considerably. It was at about 8.5% profit. I took this screenshot showing the 9.78% return before writing the new covered calls and after covering our last set. So this gives you a true indication of what the true value is. So once we look at today's results after the covered call, it will show a higher return on investment. And again, this launched December 14th during the Christmas massacre, so it's had to withstand some serious volatility both to the downside and the upside. We'll talk about that. First step is if you have 150K, you can build out this exact model portfolio: 300 shares of Microsoft, 100 Apple, 100 Facebook, 100 Intel, 100 Cisco, 200 Comcast, 900 Bank of America, 500 Wells Fargo. Who owns these companies? The richest people in the world: Microsoft, Bill Gates. Apple, Bank of America, Wells Fargo is the primary holdings of Berkshire Hathaway. So guess what two of the biggest positions in the SPY ETF are? Microsoft and Berkshire Hathaway, which in turn owns the bulk of our portfolio. So if you wanted to dub this anything, it's essentially the Warren Buffett covered call strategy. Scrolling down, here's how I entered the stock trades. And this is after we got assigned. From time to time, we play defensively. So if we do get assigned, we generate a profit that's guaranteed and baked into the cake with the covered call. And we just jump right back into the underlying ETF. That may be the case this week if I'm wrong and we don't slow down in the bull rally that we're currently experiencing. So this is ideal for folks with 150K, but you can follow it with less. If you alter your portfolio settings, I would recommend either following the Microsoft trade or the combined banks. And banking might be heating up based on option trading volume this morning and this week. So we'll take a look at that. Again, we can write one covered call per 100 shares we own of each 8 securities, and this is ideal for 150K. If you have more than that, you might consider doing all our programs. Put the bulk of your cash doing the SPY ETF Monday, Wednesday, Friday. Then put 150 into the Tuesday class, which is basically just a stripped down, more concentrated version of the S&P 500. And then finally, you might consider putting 50K into the emerging markets class on Thursday. We'll cover that on the webinar. Let's look at the trade alert. You won't get these exact prices because the market's moving up and down. But again, these are the premium securities in the world, so they're not changing that quickly. So right now we're covering all those positions for a debit. Some of them generated a profit, some of them did not. The market's gone up, so we did not lose on any position. Anytime the market goes up, most likely we've generated our guaranteed profit from the covered call, and nothing more than that. It's when the market goes flat or down that things look a little better for us relative to everybody is doing buy and hold. The second step was to roll the position. So I moved these closed trades from the open option writing to the closed area. And I'll hop to the real track record in a minute so you can see that. And here's the new positions. Now you won't get the exact prices again, but this is the credit we're bringing in. To review, we buy to close the position, and then we sell to open to roll over the position into the next week. And this is a repetitive strategy we'll do every Tuesday at 11 Eastern approximately. Let's look at the charts of each individual security and what the option market is telling us. So Microsoft is our largest position and the biggest position in the S&P 500, arguably the most important company in America in the long term. The trading volume and open interest is pretty mixed, but because this is our biggest position and we've had a nice rally, I want to protect it. So we wrote an in-the-money covered call where we have a maximum profit if we get assigned of approximately $35, which is a lot less than the $100 to $200 we typically go for. But if the market goes flat or slightly down, we can generate a considerably larger profit. So we're playing it defensive on this. Apple, we chose the 187.50 strike. You can see a similar bag. The market's actually heavily betting that Apple will continue higher from here. But in this situation, I've overrode the speculation of the market and protecting the profits, playing it safe. So this is one instance where we are going heavily defensive. If you want to be a little more risk-taking, then you could consider following the market, which is piling into these strikes right above the trading price at 195 through 200. This is a case, excuse me, this is a case where I'd rather play it safe right now. This exuberance seems somewhat extended, and I'm a little nervous about the conditions of why this market's going up so quickly with so few participants. It's a central bank corporation buyback-led rally. Okay, so now we're going into Facebook. Facebook has become ultra bullish. This is a much smaller position in our portfolio, so I'm willing to take a little more risk. We chose the 180 strike. You can see volume and open interest is flooding into these various strike prices that are bullish. Intel, we chose one strike below. Not a lot of trading volume. There's a mixed bag. There's slightly higher skew of call option activity on the open interest, but a heavier flow today on that put option. So we chose the 54, and that gives us a potential $45 profit if we're wrong and the market goes up. However, if it goes flat or slightly down, we can generate that $95. So if we go down to Cisco, we've once again chose a slightly bearish strategy to protect the profits on this one. It's a mixed bag. There's more volume on the call options today than the put options, but we chose the 54.50. If you do want a little extra risk, consider going up to the 56 strike. This is a smaller position, so this is one that you might be willing to take a little more risk on the covered call. Comcast, we chose the 41. There is no volume in the put option market and a little volume in the call option market. There's a heavier amount of open interest in the calls, so we went slightly bullish on this with the 41 strike. And here's where the very interesting information is coming in today. That might be suggesting a rotation out of tech, which has rallied the hardest, and into finance. So we look at Bank of America, and you can see a huge amount of open interest in the call options, as well as the volume pouring in this morning, betting that this bank stock will go up. We chose the 30 strike, and this is actually the third largest position in our portfolio after Apple. And so this is a big bet in our portfolio. They can generate a very nice return for us if the market does go flat or higher this week. Wells Fargo's in the same basket, and we chose the most bullish position here with the 50-50 strike. You can see the volume is flowing heavy into the call options and not into the put option market today. So that's a review of our positions. Let's flip over to the spreadsheet. Now you'll note after writing the covered call, because some of them are in the money, it has skewed our return on investment. That's why the screenshot will always be taken after covering and before rolling over the covered calls. Gives you a true idea of your real profit at that time. But you can see that we do have around 2% of our portfolio protected against downside right now. So if there's not a huge crash between this week and next week, but we go flat, a lot of that profit will stay in our account and we'll continue the plan. If the market jumps up higher, we may give up a lot of that 2%, but we have a guaranteed profit baked into every covered call. So we're playing it a little safe this week after a momentous rally that quite frankly is surprising almost everyone. So we've broken past this trend line that all the technical analysis bears were saying we never do, and The next big question is, are we close to writing history in terms of creating peace with North Korea and a new trade deal with China? That would be a very big move and something that would go down in the history books. So we're paying close attention to this. And in the meanwhile, that's all we've got for you for today's Trade Alert. I hope you'll consider joining our webinar at 1 Eastern, where you can join our community, ask us as many questions. We do a live demo, take a potential guinea pig out of the class, and start to build out your portfolio live so everyone can watch. So thanks for your time, and looking forward to seeing you in the webinar.